Nabati Samsul. My group member and I are from United Kingdom and Malaysia group. We will present about our selected countries, which are United Kingdom and Malaysia. United Kingdom and Malaysia are both being governed by a Prime Minister. However, their financial system are different. Is one of the countries that is being listed in Organisation for Economic Cooperation Development (OECD). UK is the 5th rank in the world for developing countries. Therefore, UK has been a model to other developing countries. The monetary policy is being conducted by the Bank of England, and the Bank of England is the central bank of United Kingdom, UK. There are 3 regulators in UK, which are Bank of England, Prudential Regulation Authority (PRA), and Financial Conduct Authority (FCA). This will be explained more by Sarah, my group member, under regulations in both countries. Financial institutions in UK consists of 4 groups, which are banking sector, building societies, clearing banks, and investment bank. So what is building societies? Building society is a mutual organization and also a financial institution that provides banking and financial services. 1846, and the largest building societies is Nationwide Building Society. Next is clearing bank. Clearing bank is the check and credit clearing company. Clearing banks also play role as international bank to the society, and their activities are trade services, corporate finance, foreign exchange, and advisory services. Now we move to the emerging market country, which is Malaysia. Malaysia's banking system is governed by the Central Bank of Malaysia, which is Bank Negara Malaysia (BNM). Banking sector in Malaysia is made up of 3 types of bank, which are commercial bank, Islamic banks, and investment bank. Commercial bank is different from the other 2 banks because commercial bank is the only one institution that has current account facilities. Investment bank, according to the Bank Negara Malaysia, there are 11 investment bank in Malaysia and all of them are locally incorporated. Investment bank in Malaysia is the bank that functions in capital raising activities such as financing, specializing in syndication, corporate finance, and management advisory services. MB Investment Bank Berhad is the example of investment bank in Malaysia. Malaysia is one of the countries that practice Islamic banking, and it has been existed in Malaysia since 30 years ago. This Islamic finance concept such as ijarah, mudarabah, and musyarakah. These are all types of banks in Malaysia's banking sector. Next, we will continue with the comparison of financial system between UK and Malaysia.
Hi, my name is Teh Nurafiza binti Abdul Jalil. My metric number 238289. I would like to continue from the previous presenter regarding the comparison between United Kingdom and Malaysia banking sector. As we can see that there are significant differences between both countries that we can identify the strengths and also the weaknesses of their banking system. I will highlight 2 strengths in United Kingdom and Malaysia banking. The first strength is in United Kingdom, the banking sector is the largest in Europe, the 4th largest in the world, and they are the 8th largest in the OECD in 2016 by its proportion of national economy. It includes over 300 banks and 45 building societies. There are approximately 9,000 banks branches and 70,000 ATMs available in United Kingdom. About 2.2 million people work in the financial and related service in the UK. The big 4 banks that contribute a lot in United Kingdom economy are HSBC, Barclays, Royal Bank of Scotland, and Lloyd of Banking Group. They are able to manage over 75% of United Kingdom current account and 75% of business account. They also hold more than 5 trillion in total asset. The second strength of UK banking sector is the British pound remains the world's 4th most traded currency. After the US dollar, the euro, and the Japanese yen, the currency is printed and regulated by the Bank of England. For example, I would like to give, we as a Malaysian, we want to convert our money to pound dollar, we need to have 5 ringgit and 34 cents nowadays to have a 1 pound. We can see that UK is one of the countries that have a strong currency. Next, we move to the Malaysia banking sector. The Malaysia banking sector continues to be the robust with ample liquidity. The banking sector is active in business lending and offer a wide range of banking products as well as financial service. The government of Malaysia has formed a Basel Committee, Banking Supervision, to regulate, supervise, manage the banking sector. Besides, Malaysia is home to some of the largest banks by assets in Southeast Asia. Maybank and CIMB banks are ranked among the top 10 ASEAN banks. Next, the Securities Commission said Malaysia maintained its position as Asia's third largest local currency bond market in terms of percentage of gross domestic product. This has been mentioned in the Age Market article in March 15, 2018. What can I conclude that both countries has its own strengths to keep surviving in their banking industry. So thank you.
My name is Ainur Hanis binti Roslan, number matric 239129. I will continue with comparison of financial system between United Kingdom and Malaysia. In terms of similarities, depending on market structure, it is possible to distinguish two main categories of financial system, which is market-oriented such as America and also bank-oriented such as Germany. Both United Kingdom and Malaysia are supported by a market-oriented financial system, a type of financial system which focuses on capital market and or bank and causes the provision of financial savings through the market. In this type of financial system, bond and stock are among the most important financial instruments. Let's look on the differences of financial system between United Kingdom and Malaysia. As explained earlier, we already know the difference between banking sector and non-banking sector. There are other 6 significant differences between each of these financial systems. Branching restriction, deposit insurance, rate of non-performing loan, capital adequacy ratio, reserve requirement, and also interest rate. For branching restriction, United Kingdom has an open policy and easy access to foreign banking sector. But for Malaysia, the foreign banks are limited to 4 additional branches throughout Malaysia. Next is deposit insurance, which provides protection for depositor in a bank. UK is more advanced in compared to Malaysia because it has established its deposit insurance earlier since 1982. However, Malaysia has established recently in 2005. For rate of NPL, United Kingdom is lower, which is 0.09% in compared to Malaysia, which is higher, 1.6% in 2016. For capital adequacy ratio, United Kingdom is also lower because it is only 7%, and Malaysia is a little bit higher, 11% in 2016. Next is reserve requirement, which is the amount that must be held by a commercial bank. For United Kingdom, there is no reserve required, but however for Malaysia it is 3.5%. And lastly, for interest rate, United Kingdom is lower, which is 0.5%, and Malaysia is 3.2% on March 2018. That's all.
Hi, my name is Rufanda binti Mana. My matric number 241589. Today I will share about the event that occurs in United Kingdom and Malaysia and the impact on the international banking. United Kingdom retail banks, or known as Major British Banking Groups (MBBG), have experienced turmoil resulting from the credit crisis in mid-2007. On 17 September, Northern Rock, which included in MBBG, was the first that had received emergency financial support from the Bank of England. This is because of unable to refinance itself in over-aggressive growth in mortgage lending and over-dependence on short-term wholesale funding. To stop the panic, the UK authorities eliminating a provision whereby deposit between 2,000 and 35,000 were only 19% guaranteed. Besides, the UK Banking Act was introduced, providing new provision for faster resolution of bank failures by allowing for the Bank of England to intervene and help sort out problems at a troubled bank. Therefore, Bank of England introduced a special liquidity scheme to allow banks to swap temporarily high quality, illiquid mortgage-backed and other security for treasury bills to inject more liquidity into a floundering UK banking system. Following the crisis, banking industry's level of reliability, competence and respect for the law declined substantially in the years. Next, we go for Malaysia. During Asian financial crisis in 1997, the stock market in Malaysia crashed 75% and the currency dropped 40%. This is due to the major slump in exchange rates beginning with the Thai baht and affecting several banking and finance sectors. Affected countries such as Malaysia, Indonesia and Korea experienced current account deficits, low foreign reserve and high external debt. However, Malaysia was a country that did not seek IMF loans, even though the foreign reserve had become dangerously low, but it just about adequate. After a year, Malaysia tried to re-establish the economy and introduced a set of policies including pegging ringgit to the dollar, prevent short-term funds from exiting, lowering interest rate, increasing government spending, and rescuing failing companies and banks. This was the opposite of the IMF policies, and the global was predicted that sure collapse of the Malaysia economy. But surprisingly, the economy recovered even faster, fewer losses than the other countries. As the result, today Malaysian measures are often cited as a successful anti-crisis strategy. That's all from me. Thank you.
Hello guys, my name is Sarah Aini binti Mbe. My metric number is 239061. Okay, I will continue to discuss about the regulation and regulatory agency in United Kingdom and Malaysia. For the first country that I will mention is United Kingdom. Central Bank of United Kingdom is Bank of England. It is established in 1946. BOE pursue a wider economic goal of sustainable growth and employment to ensure they can achieve their target. BOE also need to maintain the financial stability of United Kingdom. And then the legal framework of United Kingdom is Financial Service and Market Act 2000, established by European regulation to directly effect UK mainly prudential requirements and capital requirements to increase their institution and investment firms. All banks regulated under FSMA. Regulators of this act is BOE. Next, I will discuss about the Financial Policies Committee (FPC). It is established to manage systematic risk and giving direction to PRA and FCA. FPC can give recommendation to regulators, which is BOE. Okay, for the next is for emerging country we choose it is Malaysia. Central Bank of Banking System in Malaysia is BNM, or we call it Bank Negara Malaysia. BNM was established on 1959 to oversee the operation of the financial institution. BNM also acts as regulator under FSA, IFSA and Central Bank of Malaysia 2009. Then, BNM play important roles in simulating growth of financial sector and stabilizing the economy of inflation and recession problems. To add up, BNM also has responsibility for the formulating and implementing of monetary and credit policy to achieve financial and economic objectives. To conclude, both countries has their own central bank. Banking system are regulated to protect the safety of depositor funds, promote stable growth in money and credit, and it also control the foreign exchange. It is important to have regulator that monitor banks' activity. That all for me. Thank you.